You buy the dollar?
Not really. I think, look, I think the dollar depreciated by about 8% on a trade-weighted basis, last year. It's not probably going to weaken by as much this year. I think the Fed is still hiking. The bond, if you look at the bond market since the start of the year, yields are still heading higher. Now, there are good reasons why the dollar shouldn't follow yields completely, but I think, the pace of depreciation is going to be slower, especially against the likes of the euro.
So JP Morgan had the note out that everyone was talking about yesterday, and that was the fact that bonds are not in the bubble. They say that term premiums for the 10-year are going to stay low for three structural reasons. One, transparency of Fed chairs. Two, lower volatility of inflation expectations, and more global currency reserves finding their way into treasuries. Can the same be said about a weaker dollar?
Yeah, so I think we would agree with that view, and so that would imply a relatively flat yield curve, which is what we expect. We don't expect significant steepening in the yield curve, and that is actually, I think the yield curve is critical to the dollar. I think the two paths to dollar strength potentially are, either we are underestimating the growth impact of the tax reform, or maybe some just kind of productivity boost, so the end point for the Fed is higher than what we think. Or maybe we're underestimating inflation. If there's an inflation surge, the Fed will have to hike faster, so get there quicker than we think. So under those scenarios, I think the dollar would do better, but that's not our base case.
What is your estimate for the increase in growth because of the tax overall? We talked to Brian Moynihan of Bank of America just before the holidays. He said his economists were saying somewhere between 0.2 and 0.4% incremental. Where are you?
Yeah, our economists are on the low end of that, so 0.2% for 2018, yes.
And what about the aspect about the repatriation of dollars back in the United States? A lot of people are saying that that's going to really support the dollar.
That's a really interesting issue. So a lot of the time people compare it with the HIA, the Homeland Investment Act of 2004, where companies got a one-year window to bring back overseas profits and qualify for a lower tax rate. That's not how it works now. Basically, now it's a deemed tax. In other words, the corporate's got a tax bill payable over 8 years. On all of their retained earnings overseas. And then what they do with the money is their own choice. I think if they bring the money back, it's going to be relatively gradual. And also, we think the majority is already in U.S. dollars.